Hey everyone! If you're wondering what Donald Trump's return to the White House means for your money and the markets, you're in the right place. We're seeing some absolutely wild market moves in the first 24 hours after his victory, so let's break down exactly what's happening and what it means for the economy going forward. First, let's talk about this explosive market reaction. The Dow Jones just had one of its biggest days ever, surging over 1,500 points to hit new all-time highs. That's a massive 3.6% jump in just one day. The S&P 500 and NASDAQ are both up huge too. But here's something really interesting. Small cap stocks are actually outperforming the big tech companies. The Russell 2000 index of smaller companies jumped nearly 5%. This tells us investors are betting big on domestic American companies that could benefit from Trump's America First policies. But it's not just the stock market going crazy. The US dollar is surging against pretty much every major currency out there. The euro dropped to its lowest level since last July. Government bond yields are absolutely skyrocketing. The 10-year Treasury yield just had its biggest one-day jump in over 2 years. Even Bitcoin hit an all-time high of $75,000 after Trump promised to make America the crypto capital of the planet. So why are markets reacting so positively to Trump's victory? It really comes down to three main things. First, investors absolutely hate uncertainty, and the fact that we got a clear winner without any contested results or chaos removed a huge risk that was hanging over the markets. Remember all the craziness after the 2020 election? Wall Street was terrified of that happening again. Second, Trump is viewed as extremely business-friendly. He's promising to slash the corporate tax rate from 21% down to 15%. He wants to cut regulations across all kinds of industries, from energy to banking. And with Republicans now controlling the Senate, he actually has a realistic shot at getting these policies passed. Third, we might be looking at what markets call a clean sweep, where one party controls both the White House and Congress. Republicans have already taken the Senate, and they might win the House too. Markets love when one party has full control because it means less gridlock and more getting done. Now let's break down who's winning and losing in the market so far. Oil and gas companies are absolutely soaring as investors bet on Trump's drill baby drill energy policy. Bank stocks are up huge on hopes for deregulation. Small domestic companies are outperforming on expectations they'll benefit from America First policies. Tesla's stock jumped nearly 15% thanks to Elon Musk's support for Trump and the possibility of tariffs on Chinese electric vehicles. Defense stocks are climbing as investors expect increased military spending. And anything crypto-related is going through the roof thanks to Trump's pro-crypto stance. On the flip side, Chinese stocks in Asian markets are getting hit hard on fears of a new trade war. Clean energy and wind power stocks are getting absolutely crushed. European automakers are down big on worries about tariffs. And the Mexican peso just had its biggest drop in 3 months as investors worry about border and trade policies. But here's where things get really interesting and potentially concerning. Many economists are warning that Trump's policies could reignite inflation just as it was finally starting to cool down. Think about it. Massive tax cuts would pump more money into the economy. His proposed tariffs of 10 to 20% on imports would drive up consumer prices. Mass deportations could create labor shortages and push wages higher. And while his drill baby drill energy policy might eventually lower oil prices, that takes time to implement. The bond market is already pricing in higher inflation expectations. That's why we're seeing such a huge spike in Treasury yields. This creates a major challenge for the Federal Reserve, which was expected to start cutting interest rates soon with inflation coming down. But Trump's policies could force them to keep rates higher for longer to fight inflation pressures. This sets up a fascinating dynamic to watch. Trump has already said he wants to replace Fed Chair Jerome Powell when his term expires in 2026. He's been very clear that he wants aggressive rate cuts to boost growth. But the Fed's independence could be seriously tested if inflation stays high or starts rising again because of Trump's policies. It's like trying to hit the gas and brake pedal at the same time. The global impact of Trump's victory is already massive. Europe is seriously worried about both trade tensions and NATO support. Emerging markets are getting hit by the stronger dollar and higher interest rates. China is preparing for potential trade war escalation. Mexico and Canada are nervous about changes to trade agreements. European business leaders seem especially concerned. The head of Germany's Mechanical Engineering Association just warned that Trump's second term will be a greater challenge for German and European industry than his first term. That's pretty stark language from a major business leader. So what's the bigger picture here? Trump's economic vision basically comes down to boosting domestic growth through tax cuts and deregulation, using tariffs to bring manufacturing back to America, restricting immigration to push up wages, expanding U.S. energy production, and taking a harder line on trade, especially with China. The bulls say this will supercharge U.S. growth and corporate profits. The bears are worried about inflation getting out of control, government deficits exploding, and global trade getting disrupted. One thing's for sure, the U.S. economy is about to go through some major changes. It's worth remembering, though, that historically who sits in the White House hasn't mattered all that much for long-term market returns. The fundamentals of companies and the broader economy tend to matter way more than politics. Here are the key things I'll be watching closely over the next few months. First, will Republicans take the House? This really impacts Trump's ability to pass those big tax cuts he's promising. Second, how quickly will those tariffs be implemented and at what levels? Third, how will the Fed react? Will they delay rate cuts because they're worried about inflation? Fourth, what's the global response going to be, especially from China on trade? And fifth, what's the timeline look like for implementing these immigration policies? The markets are clearly betting that Trump's second term will be good for corporate profits and growth, at least in the short term. But there are some really big questions about inflation, government deficits, and global tensions that could create some serious market volatility ahead. The next few months will be crucial as we see how quickly and aggressively Trump moves to implement his agenda. The combination of tax cuts, tariffs, immigration changes, and Fed policy means markets will have plenty to react to. One final thought: while politics can definitely move markets in the short term, focusing on company fundamentals is usually the best long-term strategy. A good company is a good company regardless of who's in the White House. Markets have gone up under both Republican and Democratic presidents over time. Keep in mind that a lot of Trump's campaign promises might get watered down or take longer to implement than expected. That's just the reality of how Washington works. And some of his more extreme proposals might get pushback from his own party, especially on spending and deficits. The key for investors is to stay focused on the actual policies that get implemented rather than getting caught up in the campaign rhetoric. Watch what they do, not what they say. And remember that the U.S. economy is incredibly resilient. It's survived and thrived through all kinds of political changes over the decades. The biggest near-term risk is probably how this impacts Fed policy. If Trump's policies are inflationary, the Fed might have to keep rates higher for longer than markets currently expect. That could create some headwinds for both stocks and bonds. But for now, markets are clearly in a risk-on mood, betting that Trump's pro-business policies will boost growth and profits. Time will tell if that optimism is justified. The only thing we can say for sure is that markets will be anything but boring over the next few months. The landscape ahead definitely looks volatile, but that often creates opportunities for smart investors who stay focused on fundamentals and take a long-term view. That's all for today's market breakdown. Stay tuned as we continue following these huge market moves and what they mean for your money. The next few months should be fascinating to watch unfold.